We're going to begin completing application 16.2, journalizing closing entries. We have done closing entries before and we'll follow the same steps. It says use a partial worksheet for Seller Books Incorporated given below. Prepare the closing entries for page 23 of the general journal provided below. Close the income statement accounts with credit balances, and then close the income statement accounts with debit balances. So we're looking right here with the income statement, and we'll scroll down, and there's one with a credit balance, and then these two. So remember, if they have a credit balance and we want to close them, we need to debit the accounts. On the first line, we write closing entries because we don't have any other source document. It is December, sorry I put the period there, the 31st. So the first one we have is sales, 668, 742.20. The next one is purchase, I think it's discount, 241881. And the next one is purchase returns and allowance. And I'm getting them from right here, 415841. And then we will close them into the income summary account. So if we get the calculator, 68, 742.20 plus 241881, add 4158.41, oh come on, $675,31942. All right. The next thing that we will do, your instructions say to close the income statement accounts with debit balances. So looking at the income statement, we will not do the income summary. We close income summary last. We close it into our retained earnings account. And so we'll start with our sales discount. I wonder if I can do that to see them. Still the 31st. There. These are debit balances, so we need to credit them. We will debit income summary, and I'll just wait till we're done and add them all up. So the first one is sales discount. It is a credit of $1454.85, and then we have sales returns and allowance for $4215.48. Purchases, $284,835.25. Advertising expense, $12,540. Cash short and over, $808. Credit card fee expense, $94.8110. Depreciation expense, office equipment, $64.80. Depreciation expense, store, $76.50. Insurance expense, $12,000. Miscellaneous expense, payroll taxes expense, I'm just getting them from over here. And down some more. And we have rent expense, salary expense, supplies expense office, supplies expense store, uncollectible accounts expense, utilities expense, oops, and the last one, federal income tax expense. All right, I'm going to let you go ahead and add all these up yourself, and then you'll put the total right here because your debits always equal credits. Okay? The next one that we will close, our next closing entry, is to close income summary. So to close income summary is going to be the difference between this number, and then your amount right here for your merchandise inventory. The easiest way is, since we don't have a ledger account, is to look here. It's going to be our net income. So if we had a net income, that means income summary would have been a credit balance. So to close it, we need to debit it. So we'll do income summary, and it'll be a debit for the amount of the net income. And we will credit retained earnings for the same amount. Our last entry to close is the dividend account, and we will close dividends into income summary. I just need to look at this. Come on, open up. There we go. Dividends is right here in the balance sheet. It had a balance of $12,000 debit. So to close it, you will need to credit the account. So we will debit retained earnings and credit dividends. And that is how you do the closing entries.